We've had some serious technical damage here done lately to the charts, and we're going to unpack all of that in today's episode. So grab your cup of coffee. We're going to be here for a few minutes. My name is Brian Cannon. Welcome to Markets in 5. So the first chart we're going to dive into is the daily trend. Now, we've gone through this chart a number of times in this series, but what you're starting to see now is this clear break in the trend line. So it's not uncommon for what was support, right? So it kind of bounce. It broke it. It took out the 20-day moving average. It took out the 50-day moving average. It came down. Came back up, and what was support now becomes resistance. So it broke down through support, came up, couldn't break back through the resistance to get back into this channel, and then it broke down pretty hard on Tuesday. So the futures here on Wednesday are up a little bit, so you might get a little bit of a breather here, which more than likely for us is going to be an opportunity to start lightening the load a little bit. So there's been some technical damage. Basically the storm is brewing, the waves are rising. We're kind of starting to see some opportunity to start taking some profits at this point, and just be a little cautious on the downside and give ourselves a fighting chance for if it drops down, then we've got some dry powder. We can go back in at lower levels. But you can see the RSI supports this break. It's dropped down below the 50, came back up, tried to get above it and couldn't, so it's breaking back down. And then the same thing with the MACD here. The MACD is in zero territory, and that's usually not a very positive thing for the market. So these types of indicators lead me to believe that this pullback is not over. There might be a little bit more to it. So now, what we don't know at this point is it going to be a major pullback where we see a 15, 20, 25% pull down, or is it going to be a buying opportunity at 8 or 10%? So all we can do is just measure the level of risk, look at all the various indicators, and determine whether the atmosphere is good for taking risk or good for taking risk off the table. Now, again, if you've watched our episodes in the past, this chart is not a foreign chart to you either. So, but this is again indications as to whether the market is starting to roll over or not. And this is a very, very close chart. We're very, very close to breaking down on this chart as well. So again, when you have high yield begin to relatively outperform the S&P 500, that generally happens in a major market pull down or a reversal of the market. And we're starting to see a breakout here in the outperformance here. You've got this little, it's kind of starting to lip up here. And this is, again, high yield relative to S&P 500. And then this is just high yield in and of itself. And so, again, when the trend line break to the downside, and that coincides with an outperformance of high yield relative to the S&P 500, that's generally not a good sign. So that is not a sell signal yet, but it's very, very close. So we're watching this like a hawk. This final chart that we're going to go through, same thing, but it's on a weekly chart. So we look at the, it smooths some of the noise of the market out. It takes the trend and elongates a little bit. So, but you can clearly see we've had an up channel trend since 09, the pull down back then. And so we've had some levels of resistance that's been respected. And I think this time is no different. We just can't seem to break through that upper channel, and that has been a very strong level of resistance. So the question is, are we going to find support somewhere around here? Or is it going to drop down to this line here, or is it going to drop down to this line? So again, we don't know how far the damage will be, if it's at all. But again, when the warning signs are out there, and we're starting to see problems that are brewing in the market, we would rather take our equities and do things that have a little bit less risk in them. potentially raise some cash in situations. So that's where we're at relative to all of the signs that we're seeing. So now hopefully you understand why we're, I would say, on high alert. So, but if you have any questions or if I can be of assistance in any way, give me a shout, and look forward to seeing you on the next Markets at 5.